Platinum is the best performing metal this year, outpacing all precious and base metals. After trading in a relatively narrow range for close to 3 years, the metal has finally broke out and prices have risen almost 50% year to date. To help us explore what is driving platinum, we have Wilma Swarts, Director of Platinum Group Metals from Metal Focus, join us today. Welcome to the Commodity Exchange, a podcast where we bring you insights from the world of commodities. Whether you're an investor or just want to learn more about the topic, this is the podcast for you. For those of you in our audience who follow precious metals, I'm sure you've heard of Metals Focus. But for those of you who have not heard of it, Wilma, why don't you tell us a little bit more about the company you work for and what you do there?
Thank you, Nitesh, and thank you for hosting me on your podcast. So, Metals Focus is a leading independent precious metals research consultancy. We have a team that's spread across 8 countries, and we dedicated to precious metals industry. So we cover only precious metals and provide statistics, analysis, and consulting and forecasts on the global precious metals market. Now, I specifically look after platinum group metals. So, I head up both the supply and the demand research around platinum, palladium, rhodium, ruthenium, and iridium.
Excellent. So you were the person to having the seat to help us unpack what's happening in the platinum markets.
The
Um,
hot seat at the moment.
so as I mentioned in the intro, platinum prices have been on a tear. They accelerated in the second quarter to lock in probably the best quarter-on-quarter performance on record for the metal. Um, Walk us through what set the metal off to such a fantastic sprint after what was quite a rather pedestrian performance in the prior few years.
Yeah, in fact, I think we were all somewhat caught by surprise at how fast it ran, but we've not really been surprised at the fact that it is increasing and that it is running. The platinum has been in deficit for the last 2 years already, so since 2023, and we have been very constructive about the metal for some time. We most probably are taken by surprise by how quickly it's broken out. We were expecting it to break out later, and we're also surprised at just the speed of this. And so, if we think back at Platinum London Platinum Week, which happens in May, we started seeing the price escalate. Now, the messaging in Platinum Week was a lot around supply constraints. So in the first quarter of this year, we had some flooding in South Africa, which had an impact on supply from the country. And at the same time, towards that latter part, we saw the significant increase of Chinese imports of platinum into China, a growth and interest in jewellery. So in China, what we saw is a shift away from gold to platinum in the jewelry market, which is the exorbitant price of holding gold inventory versus holding a platinum inventory. So you saw that interest and shift in jewelry. So that helped increase the platinum demand and the flow of metal into China. Add to that when you see that, you will often have speculators then take position around that, and this just kind of spiraled and pushed the metal into these kind of higher realms. So I would say it started as a supply constraint, and we will continue to see supply thematically be the driver of where we see platinum go. But at the same time, you have solid demand, and you have this peak interest or this interest in jewelry demand, this growth in jewelry, and then picked up by the investors, which saw the price then continue to rise.
Wow. So last month, we also saw lease rates for platinum reach all-time highs. Why did they rise so much?
Well, so again, that has a lot to do with the fact that there's tightness, liquidity, there was tightness in the platinum market. And so what we, there was also this kind of this anxiety around the tariffs. So this, we have to talk about tariffs and the concerns that that tariffs have around the commodity prices and just the uncertainty around it. And we saw that happen in gold as well. And so really, I think that the messaging that came out saw some reaction. So we saw some defensive and strategic purchasing by companies, by consumers of platinum, and that required metal in a certain place, and the metal wasn't available. And that, of course, is the reason why we've seen this spike in the platinum lease rate.
Wow. And so have lease rates now fallen and normalized, or are they still quite elevated?
Yeah, I think that what we do have, and this is one of the things that we've always said, is keeping somewhat keeping the platinum price in check, is that the ETFs, the availability, the visibility of ETFs, and we did see some release in ETFs, so we've seen some sell off in platinum ETFs, and that kind of again helped somewhat with the availability of the metal. And that, for that reason, we are seeing the lease rates come down somewhat. Still quite high, but definitely not at the all-time high that we saw about a month ago.
Yeah, it is quite interesting the role of exchange traded products in this market, and we certainly at Wisdom Tree saw some selling of exchange traded products with those high prices as people took profit, and I guess that puts liquidity back into the market, so it's a nice source of liquidity when it's needed. Yeah.
Yeah, I think to add to that, we did see, after consistent buying, we did see that, when the prices hit around about 3,000, $1,300, $1,350, we also saw a little bit of a pullback in Chinese buying. So that also helped somewhat with, liquidity and availability in the market.
Yeah. So you mentioned tariffs. Maybe it's worth unpacking tariffs a little bit more. Tariffs are a massive source of confusion and anxiety in the markets, and certainly with the gold market. Just last week, so we're recording here on the 13th of August, and last Friday, which I think was the 8th of August, um, gold futures prices surged on the back of information from the customs and border security, indicating that Swiss gold bars in 100 ounce and kilos would be tariffed on the way into the US. That confused the market because bullion was supposed to have been exempt from tariffs. So U.S. prices, where the gold futures on NYMEX settle, shot up massively. But then there was clarification from Trump's tweet within a few hours or days, indicating that gold won't be tariffed. We're still waiting for some official information, but that's one example of tariffs creating a lot of upset and anxiety in the market. Um, I also saw something similar in the copper markets a few weeks ago when uh, the assumption after once again social media tweets or posts from Trump indicated that all copper would be tariff going into the US, but then refined copper was exempt from the tariffs, at least for now. Once again, throwing a lot of confusion into the market. Um, Tell us a little bit about how some of that confusion or maybe lack of information at the moment is causing some anxiety in the PGM markets, and tell us about some of maybe some of the big exporting countries and how they're being affected by tariff uncertainty at the moment.
Yeah. So, I mean, tariffs certainly has created some of the volatility and anxiety around platinum. So, if we start at, in February, we saw quite a lot of metal move. We saw the same as gold, but a lot of platinum move into the US on the back of tariff fears. And that really, the last time we saw the warehouses so full of platinum was during COVID, when we had that logistical dislocation. And so we saw tariffs create in early this year, create that same anxiety, and we saw a flow out of London markets and Swiss markets into the US, into the 9X warehouses, DME warehouses. And so then, once it was there was more clarity by April, when Annex 2 came out, and people knew that, or it was clear that platinum group metals will be exempted. We saw a gradual flow out of the warehouses. But then, along with the copper tariffs, and the talk of the copper tariffs, there was a lot of nervousness. At the same time, South Africa in itself is a little bit in the crosshairs as far as a geographical location is concerned, from the US's perspective. So the combination of tariffs on commodities such as copper, and tariffs, targeted at a country in order to perhaps influence the country, has created that nervousness, and we saw a flow back in of metal into the warehouses in the US. So that all has created, the nervousness and the anxiety, and so again, what we understand today is that there are no tariffs on PGMs. But we also heard Europe spoke about potentially some retaliatory tariffs, and again, those that all creates nervousness. We definitely have a concern, and we're finding that people are wanting to keep physical metal onshore and in specific locations, and that has created some of the tension and anxiety in the metal, and has influenced the metal price.
Yeah. And maybe for the benefit of the audience, just to emphasize how important South Africa is in the PGM world, it counts for roughly 80% of platinum mine
So yes,
production.
just short of 80% of all mine supply platinum comes from South Africa.
Wow, so that is huge. So a 30% reciprocal tariff on the country would be damaging if PGMs were included, but obviously they are exempt for now. But once again, there's been a lot of misinformation from the administration. In fact, so it's hard to pin these things down. So that it's that nervousness is quite easily explained. Um, Another big exporting country in the PGM space is Russia. Tell us a little bit about how maybe some of Russia's relationships with the US could be complicating the picture for PGMs as well.
So, Russia's not a big exporter of platinum. They do export platinum, but it is really palladium where that has a massive impact. And if we look at, kind of the duties on Russian PGMs, palladium is exempt. And so, there's quite a consistent flow. There has been a consistent flow throughout the duration of the conflict of palladium into the US market. And we certainly are seeing that, in fact, for the last quarter, it was even higher. And so that does actually have an impact on the US market, and most probably on palladium prices, the availability of palladium. If that were to change, then that will create a further nervousness around palladium. I think palladium, somewhat from a demand perspective, has also had a little bit of tailwinds around the climate change agenda being less of lesser importance in more recent times. And with the rollback of the EPA regulation not requiring or not setting specific targets on electrification, that has given some tailwinds to palladium. But the headwind there is that, of course, if there is material available and if all metal is easily accessible, then it will put a, a ceiling on the price, and that's what we're seeing.
Excellent. So you mentioned earlier on, there's been a lot of demand for platinum in China. So the imports into China and Hong Kong have risen. Um, yeah, I think you mentioned that a lot of it was from jewelry fabricators. Tell us a little bit more about that. Why has that really become, a trend in recent months?
Yeah, so as I mentioned, I think that holding gold inventory was becoming quite expensive with the gold price where it is. And there was a concerted view or effort to increase the platinum inventory holdings by fabricators, by jewelry fabricators and manufacturers. With an aim of selling, into the market. We know that historically, China has been the biggest platinum jewelry market. And so we saw, demand uh, on a fabrication level increase quite significantly. And we are going to see in the second half of this year whether those sell through to the retail, into the consumer market. But there was this growth in demand in the jewelry sector, and the that it was noticed, and as a result of that, we did see that the investors in China also took an interest in platinum. So that compounded this demand and this flow of platinum into the China market. Not that there is also, industrial demand in China. We are seeing, continued demand from a chemical, glass, and even the hydrogen perspective. So, in general, there is a solid industrial demand in the market, but what's driven the kind of high inflows is a combination of the jewelry market and the investor interest, speculative investor interest in the Chinese market.
Excellent. And so, the jewelry fabricators have been building their inventory. Have there been any visible signs that end jewelry demand has also picked up? I mean, you'd imagine to do so with, in response to those really high gold prices. Gold jewelry is a lot more expensive today, and typically, uh, g- consumers of gold tend to be a little bit price sensitive, more sensitive than investors, for example. So, has there been any pickup in end jewelry demand as well?
Yeah, I mean, I think the jewelry market is quite different in terms of the different geographies. So, you know, um, after a couple of years of decline in the Chinese market, we've certainly seen that growth. And quite a significant growth. But you also had the benefit of growth markets elsewhere. So, we've seen significant growth in platinum demand in India, platinum jewelry demand in India. Now, that has softened somewhat because a large part of the Indian market is fabrication that is for export for the US market. And with that, with the tariff concerns, that has placed a dampener on India's demand, but it is still growing, healthy growth in India, and then the US market as well. We know that platinum is a bridal metal, and certainly we have seen quite healthy demand for platinum jewelry in Europe and in the US. So all in all the markets have seen a growth partly benefiting a little bit from the high gold price, and still wanting a precious metals jewellery piece. You would go for a slightly more affordable piece, but know that you're still getting a precious metal.
Excellent. And so you mentioned earlier on, platinum is in a supply deficit, and has been for the last few years. But how is mine supply progressing this year? Are we reducing that deficit, and have there been any sort of downside or upside surprises in mine supply that you can see so far?
Well, so in fact, actually, last year we had a bit of an upside surprise. We certainly didn't expect the mines to draw down their inventory as fast as they did, and we
Mm,
don't expect that this year. So we forecast a 6% decline in mine supply for 2025, on the back of the fact that we've had the flooding in South Africa in Q1, which will have an impact on availability of metal Q2, Q3, and certainly when the impact is at mine basis. So if you're not mining, it's really hard to catch up on production. If for some reason you're not refining, you can always catch up. As long as you mine the ounces, there is an opportunity to actually catch up in a year. But when you're not mining, then that has an impact. So for the full year, we are expecting to see a decline. In fact, we have South Africa in structural decline. There is some benefit, of course, with the prices, 36% increase in the basket price. You could see that some operations that were targeted for care and maintenance, there might be, some progression of mining slightly longer. So, but that won't have an impact in the near term. That might impact a longer term. It takes quite a lot of work and effort to place a mine on care and maintenance, and to bring it out of care and maintenance, it also takes a long time. So we're not expecting to see any meaningful increase in mine supply for 2025, even on the back of the higher prices. And then, I think that, as I say, over longer term, we are expecting to see a structural decline in mine supply.
uh, And how about scrap supply? I'd assume after a 50% rally year to date in the prices, scrap would more likely to come to market. But that's very sort of a naive approach. Tell me, is there the scrap availability, and do you think it will come to market?
Yeah, that is a very, very interesting question, one which the industry is grappling with at this moment in time, because we're there should be more metal available from the secondary market, but it's not coming to market.
Hmm.
And partly the price was a factor. So the expectation is that with these higher prices, we should be seeing more secondary supply come to market. But if we just think back 2019, we're not nowhere near the levels of secondary metal that came to us. There was a run up in 2021. We saw quite a bit of metal come through after the COVID period, and there was a push. Prices skyrocketed, and everybody found metal in warehouses, etc. But since 2021, we saw a almost 40% decline. So 20% every year since 2022, in secondary supply. Now, 2024, we saw a stabilization in the supply around that, and 2025, we are expecting an increase, but a modest increase of secondary supply. If we look at where most of the secondary supply comes from, about 80% of the metal, 85% comes from auto scrap, so spent catalysts. And during the COVID period and cost of affordability issues, people have just been driving their cars for longer, and so the availability of material was just not there. Additionally, we've seen some hoarding. When you're able to sell a catalyst that contains rhodium at $30,000 and palladium at its peak at $3,500. Why would you sell your catalyst when the prices are, $4,500 for rhodium, and it was what, almost $800 for palladium at one point in time. So we saw some hoarding happening.
Mm.
At the current price levels, rhodium breaking through $7,000 recently, palladium kind of riding the coattails of platinum and being above $1,000. It's starting to make a lot more sense, and we could be seeing more secondary supply come to the market.
Wow. And I know you touched on this earlier, but good to dig into it a little bit more. There have been various policy tilts in recent months, especially since the Trump administration has come into power, favoring internal combustion engine vehicles and hybrid vehicles over EVs. I guess these sort of mandates to shift from one drivetrain to the other has kind of softened in recent months, and but that's already been a trend that we've been seeing for the last year or so. Um,
Sure.
ha- have you adjusted
Sure.
your more longer term platinum demand forecast on the back of that, and how is that impacting your sort of long term forecasting for the metal?
Yeah, I mean, I think that what we have to be careful of is that, that the world it's not just the US. So definitely the rollback in the US is beneficial for PGMs. And the reality, though, is that we've always estimated that that would be a very slow adopter of electrification.
Hmm.
Now, China, of course, we are seeing an increase in hybridization there, and that will have a benefit. But it is still, the growth trend in China, in Europe, is still heavily towards electrified vehicles. And again, in historically, the hybrid vehicles used to have slightly higher loadings. Now that's still true for some hybrid vehicles, but there are a range of different types of hybrid vehicles. So it's almost one to one, and
Hmm.
so essentially, we certainly do have always seen that PGMs will have a strong demand and still play a big role in the automotive industry, because the internal combustion engine will continue to be a form part of the different ranges of powertrains, but we are expecting that to decline. So even though, in the US, the adoption rate might be slightly slower than what was anticipated before, we had always anticipated quite a low adoption rate or a slower adoption rate there in any event. Whereas in China and in Europe, the adoption of electrification, the powertrain is still continuing fairly strong, and so you know we are seeing that automotive demand, PGM automotive demand, will be in decline over the next decade. But is that at a slower rate? Yes, certainly. Hybridization is softening the deceleration rate of PGM demand, but it is still it is currently still the biggest demand segment for PGMs, and it will be in decline over the next decade.
Alright. And how about for like heavy duty vehicles? I mean, I assume tightening emission regulations will be supportive for PGM specific and more precisely for platinum for heavy duty vehicles. Is there any big changes in regulations or legislation there that you think be either supportive or damaging?
Well, so I mean, of course, Euro 7 is supportive in terms of heavy duty demand from the heavy duty sector. I think add to that we still believe that the fuel cells will play a much bigger role in the heavy duty sector, and the amount of platinum that you need for one truck compared to the amount of platinum, a fuel cell truck versus a diesel or any other propulsion or fuel uh, is significant. So we still see that hydrogen or the fuel cell will play a big role in heavy duty, and that is supported by platinum, and partly the reason why we continue to be quite bullish and constructive on platinum compared to the sister metals.
Excellent. So thank you, Wilma, for sharing your valuable insights with us. Please do let our audience know how they can read more of your research material and follow you.
Right, so you can just head on to metalsfocus.com, and if you scroll down, you can subscribe to our a weekly publication. Or if you wanted greater detail, there is also subscriptions to monthly information, monthly forecasts, and then a broader range of 5-year to 10-year outlooks on the different precious metals.
Excellent. Well, great. Thanks everyone for tuning in. We hope you've enjoyed today's episode of the Commodity Exchange. If you want to hear more from us at Wisdom Tree, please do subscribe on whichever platform you're using. You can follow me on X, formerly Twitter, with the handle at Nitesh Shah WT. And if you want to learn more about commodities, visit Wisdom Tree's website, where we have a wide range of research material and insights. And to clarify, the views and opinions expressed in this episode are those of Wisdom Tree and Metals Focus and are subject to change. Anything we present in this podcast is not intended to be relied upon as a forecast, research, nor as investment or tax advice. The information and opinions expressed in this podcast are not a recommendation, offer, or solicitation to buy or sell securities, and reliance upon them is at the sole discretion of the listener. Please remember, past performance is not an indication of future results.